In this video, we're going to go over the top 5 UnitedHealth Group thesis from the biggest finance YouTubers out there. I'm going to give them a tier ranking. Obviously, right now, UnitedHealth Group has pulled back a bunch. We're going to look at these. Some of these are a little bit older and some of these are more recent, but these will be about 6 to 8 minutes. One of them is a little bit longer, but I'm going to rank these fairly. Now, S tier is going to be the highest ranking. This is Burry, Buffett, B&F, some of the greatest traders or, investors that people know of. And then obviously Burry, it doesn't have to be, these guys don't have to be long like I am the stock. They don't have to believe in the, stock long term. They could actually say it's a sell. But if it's ranked this high, these are obviously the best tiers. And then the bottom is going to be like, really? Like, why did you make this video? Does this video do you even know what the stock is? So let's hope the top finance YouTubers with millions of subscribers, we can learn something. And we're gonna go over these just like this is live. And I'm gonna start doing this on the channel. So if you guys like this, hit the like down below and subscribe. So the first one's gonna be, Meet Kevin, one of the biggest finance YouTubers. Let's see what he says. Now he's got 2 thesis videos. This is a quick one. This is what he had to say a couple months ago.
Look, is this a great buy the dip opportunity? For people who are just gonna put any kind of morality on the shelf? Maybe. But look, I stay out of the insurance sector because it's complicated enough as is. And looking at this UnitedHealth stuff, I'm like, man, I scratched the surface and I'm like, this is a disgusting business. I'll pick any other business. So look, if you buy the dip and you make money on it, I'm happy for you, but I can't touch this kind of business with a 10-foot pole. And again, I'm not telling you not to. I'm just saying for me, man, it's not my world. If you're looking to diversify, check out how.
Okay, so my first thing with this is, this isn't his full thesis. This is his pretty much clickbait. It was, a lot of people were talking about it at the time. So right now, Kevin, you got a thesis, really? Now, the greatest stock investment of all time is a controversial stock. It's Marlboro. A lot of controversies, right? Marlboro stock, if you invested 10,000, is worth 26 billion over the last 100 years. Now, Philip Morris, Altria, this stock split many times, dividends like crazy, but this was not necessarily in the beginning, a stock that people thought was a very moral thing long term, especially with all the lawsuits, and there's just so much you could say about this stock, right? But it was the greatest stock gain of all time. So you, as an investor, you really do need to, obviously, when you're looking into a stock, if it's against your morals and beliefs, so be it. But to base your investing on just what you like and what you don't like, it's not always going to be good because you might like something and the stock goes down 99% or goes bankrupt. And a lot of these YouTubers might have even covered those things. So let's hear what he really has to say.
Talk about UnitedHealth. UnitedHealth stock is down 42% year to date, over 44% over the last 12 months. Their Q1 balance sheet, let's just put it this way, it's not that desirable. I was actually surprised that a Dow 30 company does not have that desirable of a balance sheet. Take a look at this, and I'll hide myself so I don't cover up numbers here. All right, so on a liquid basis, they have $96 billion in current assets, but they have about $113 billion of bills to pay, which is a lot. They have to pay those bills over the next 12 months. Now, the company does generate about $20 billion of cash flow if you annualize out their Q1 2025 cash flow of about $5 billion, which means they would have just enough money to pay all of their bills. And so if you subtract their longer term debts from their longer term assets, they've got about $100 billion sitting around. So it kind of gives you the tangible value of this company. So think about it as they have net equity of $100 billion and they generate around $20 billion a year in cash flow, again, annualizing their Q1. They actually make a lot of money in that sense.
There's the thing. It's an insurance company. So they're not going to be able to, you're not going to look at this company and say, oh, it's going to be, value, just like Meta is. Obviously not. Now, one of the things with this company is they had unforeseen expenses last year and into this year. There was 2 black swans, I like to call it. And I don't even think a lot of people understand this. There was so much pent up demand during COVID that all the people wanted to do surgeries. A lot of times I actually was going to get one, but I couldn't do it at the time. So it all got pushed up to, where we're at now. 2024 is when a lot of this started happening, and also 2025. So that's one. So they also had that data breach last year. So they were really focused on that. So they were complacent, and, obviously a lot of stuff happened in this stock, and these are black swans. Now, when you also look at the other thing is AI. AI is causing doctors, my doctors use it. They use form of like ChatGPT, Perplexity, and they're able to utilize this AI to get people in and out fast. My wife has been going into the doctor and they're literally looking at their watch, pretty much trying to, get people in and out, in and out, in and out. And a lot of these people too are able to, myself, I've found, issues, my own health issues, running my blood work through Perplexity and stuff. And ChatGPT actually found it before the doctors did. So one of the things is a lot of these AI systems, a lot of these hospitals and these doctors using, it's actually finding stuff early and maybe even preventing stuff where I don't think you would have had this potentially a few years before this, and even take COVID out of it. So that's the thing. You gotta look at these companies and say, what happened? You can't just look at a balance sheet. If I didn't know any of this happened, I would have thought the same thing. But you really got to dig deep and say, hey, is this going to change? Yes, of course it's going to change. Costs are going to go down.
So on their net equity, they're returning like 20% per year, which is phenomenal. Now, you are paying a premium for that business. Right now, you're not paying $100 for the business. You're actually paying about $264 billion for the business, which means you're paying about 8x their cash flows for the company. Now, sometimes what I like to do is I like to take their cash flow and divide it by their market cap. And that's also still pretty good. That's a 7.5% yield. That's not bad.
Yeah. The thing is I like to follow the price to free cash flow ratio. So this was, down to like an 8, which the thing is, it doesn't necessarily mean it's going to be a good company. We can look at Zim. This is an anomaly. The price to free cash flow is a 0.53. This company is bringing in $3.53 billion in free cash flow, and the market cap is 1.8 billion. So it's not always going to be that way. Now we'll move Kevin up, and maybe this will go up even higher. Let's see what happens.
Sort of a free cash flow yield if they can keep this sort of annual cash flow going of 20 bill, $5 bill a quarter. Maybe they can't.
And it was the trailing 12 months on there is 25 billion, by the way, for free cash flow.
And that's where the questions are, because if we just annualize out Q1, it doesn't look that bad. Yes, their balance sheet isn't that perfect, but it's not uncommon for insurers to operate a little tight, and they've got the free cash flow if we can annualize Q1. If we have to annualize Q1 of last year, it ain't that good, because they're only clearing like $1 to $2 billion in free cash flow. It's not as good. That said, the insurance business is a very low margin business. Their Optum, I guess it actually is. It's not Optimum, it's Optum. But anyway, their Optum services business, where they provide services for pharmaceuticals and to doctors and others, only has an operating margin of somewhere between 5.8 to 7.4%, depending on which quarter you're looking at. And the actual healthcare business only has margins of between 4% to 6.2%. It's a low margin business. They pay out a lot of money. And so it kind of makes sense that they go around and try to find whatever loopholes they can to milk as much money as possible out of the system. But this is where the fraud allegations are coming up, because they're doing things that are just wrong. And this leads people to say, why would you ever want to touch this business? Because a lot of people are looking at this as a buy the dip opportunity, but others are like, I just can't bring myself morally to invest in this business. That's what some say.
I mean, the same thing you could say about Meta. When I was investing in Meta, so many people were like, Meta is never going anywhere. This is it. They're spending too much money. They already have billions and billions of users. Where are they going to get these people? And one of the things is they were under investigation. They still are. So a lot of people can't stand Meta still. There's really bad groups that have been on there, human trafficking, all these things. They collect data on people and have sold it and have used it against, in elections potentially. And, they're still under an investigation for this monopoly, supposedly they have. So, and a phenomenal company in growth wise, with Meta, with their ads and all these things. If you would have looked in 2022, when it was $88, you would have said the same thing. And, this is not the only company that might have had issues. Wells Fargo, we talked about it before on this channel. This company literally committed the worst financial crime, I think, in modern history. The stock's up 120, 150% right now from those times. So they got slapped on the wrist. Now, this, I think, with having a new CFO and the, CEO that was the previous CEO is now back, these guys weren't really at the helm when this was going on. So maybe this will be a good thing too, but you can't really just look at a stock like that. You can't trade on emotions. You really just got to look overall. Do they help people? Of course they do. They've helped way more people than they've hurt. Okay. There are issues out there. And remember, there are people trying to fraud this company too. you got to remember that there are doctors out there, very bad doctors that are also trying to fraud the system. It is a business. And sometimes these doctors, plastic surgeons, they're trying to milk as much as they can and get this potentially out there as well. Sometimes I've seen plastic surgeons really mad at health companies like this because they won't float the bill. But you know what? There's a lot of fraud out there. And sometimes, they've caught so much already. We're talking like 15+ billion in fraud. And really, I think that's what the government's looking at right now. And this company, they could lower costs long term too with some of the things we'll talk about later. And in the end of this video, we're going to release a few good things about UnitedHealth Group, some golden swans, because these things they're talking about are black swans that's happened to the company.
Now, keep in mind, the CEO did just buy $25 million of stock and the CFO bought $5 million of stock. A lot of people see that as just signaling though, because you might not know this, but the CEO's stock package, $61 million. So it's kind of like he took a fraction of his entire pay and sort of like reinvested it back into the business to send a signal.
Well, one of the things, the other signal is if you are under investigation and you're buying, at the time, I think it just signals to investors too that, hey, if you're also buying when the stock goes down and you committed fraud, then they're going to hit you with some more charges because it's insider trading. Something, you knew you were doing wrong. They could really hit you hard. So that proves, the current management doesn't think that anything's going to come about this, right? And this is not the first time. If you do a little research, they've already been under investigation before in 2017. And this happens when you are number 3 in the US for revenue. There's current litigations for the biggest companies that you probably never even knew was going on, okay? So this one just got a lot of publicity because the CEO of one of their insurance arms obviously was assassinated. So a lot of people are looking at this, and there are people right now that are hurting from all types of insurance.
And if you look at their income statement, they do pay out a lot of the premiums that they spend, which again contributes to these lower margins. They pay out about 84 to 85% of the premium dollars that they collect. So imagine.
So that MCR was higher because of the things that we already talked about. So they want to get this down under 80. And I think this company, their growth is going to be phenomenal. Okay. If they can get these MCRs down with AI, with some of the golden swans we're going to talk about, with these pharmaceutical companies dropping prices, making deals with the Trump admin very quickly, potentially next week, you're going to see these drop quick. And then they're going to raise premiums. Now, the 250% since the year 2000, healthcare costs have gone up. They're the number one costs that have gone up. A lot of tech stuff has gone 80, 90% down. And I like to just show you that AI is going to bring those down, just as some of those other costs have came down. And we're going to probably start to see healthcare costs come down, and their margins are going to improve a lot. That's my long-term look on it.
You were an insurance company and you were collecting $100. You're paying out about $85 of that in premiums. It's kind of an interesting stat if you're ever thinking about insurance. And then they got a whole crap load of costs on top.
And the great thing is next year when these premiums go up, they should have did this last year, but they're complacent. When they do that, raise these premiums, they could probably get that free cash flow back, and this MCR level can maybe even be back below this. So that's the great thing about insurance companies, especially one of my big thesis points. People are getting healthier again. People getting cancer, they're actually living longer and fighting it. And really, if you're hundreds and hundreds of pounds overweight and you lose weight, you're probably going to be healed of a lot of issues that you take medicine for, and it's going to save them money. So it's like you're not getting in a car wreck. So of course your insurance company, they're going to do good. That's why Warren Buffett loved, car insurance, Geico. And that's really what he really had contributing to majority of their gains, because you can invest that money and the company can boost ROE, and the investment, obviously for a long-term investor getting dividends, that flat free cash flow is coming back. So it's really good.
Top of that, obviously, because they have to deal with the government administration and people and all the claims and underwriting and processing. It's dealing with the hospitals. It's kind of just a crap business. The margins are really, really low and their balance sheet is tight. Again, long term, they've got money, okay? And they produce cash flows. But it's a tight and dirty ship. Think about it like that. It's not like they're selling iPhones at a 25% margin, right? They're bringing so much money down to the bottom line because they're selling you this beautiful App Store wrapper as well. This is a tight and dirty ship. Now let's talk about the dirt. The Wall Street Journal did this Pulitzer Prize winning expose on them, and I'm just going to give you the bottom line on this, okay?
The Wall Street Journal's, it's funny. Just go look, it's not that good. And the other thing is, they've been already debunked on a lot of the stuff. It's just to get views and clickbait, right?
Let's say you're a health insurer, and the government tells you, hey, you will get paid in lump sums for any Medicare Advantage patient you have that has a new diagnosis, okay? So imagine you're an insurance company and the government says, hey, if you insure those 10 people over there and they have no diagnoses, you get 0. But
what he's not thinking about is this is not the insurance company diagnosing them. These are doctors. And guess what? What I just told you, ChatGPT, AI, these forms of AI in medicine, it's finding new things that I didn't even know I had and it fixing my issues. I don't think people are even understanding what's going on. There is a massive change. And when you have healthcare costs are the #1 in all costs that have gone up since the year 2000, then you're going to see that on these bottom lines, and if they're not adjusting for it, then that's why you've seen their outlooks drop from 25 billion free cash flow to 16. But obviously these can change because they can raise prices and, on the premiums, and then they can drop a lot of the costs.
Each of them has one diagnosis. We'll give you $2,500 per person. If they have 2 diagnoses, we'll give you $5,000 a person. What incentive do you think that sloppy government assignment creates for UnitedHealth? Let's send nurses to every old person's home on Medicare Advantage for free house calls to see if you have any ailments. And that's exactly what they did.
Now, here's the other thing. People are getting older and they're living longer, and people are not that healthy in the US. That's the problem we're in right now. People are living longer. A lot of the US food is not as good as a lot of the food you can get overseas from the same companies. There's additives and there's things where that's why a lot of people have gained weight, have gotten diseases because they don't eat healthy, and they think that, oh, this is fine for me to eat, and they eat that only and they don't exercise. So a lot of these people living longer are starting to develop certain diseases that you probably wouldn't see in other countries. That's why the US pays the most for pharmaceuticals, and their healthcare costs are the most. Now, I don't think that this is necessarily a conspiracy. UnitedHealth Group is sending nurses in, but that's their job. In their silo, that is their job. They've got different segments. That is what they do. They're there to help people live longer in a healthy life, and this is what happens in this business. That's like saying I'm mad because Mark Zuckerberg is giving me ads, when I'm on social media. That's what they do. That's what they're supposed to do. And are you going to get mad at Mark Zuckerberg because you see more ads? You might, but guess what? That's the business. That's how this works. When you got people very sick in the US, that's what happens. When you got people living longer, of course, there's going to be more diagnosis.
Hired nurses sometimes to go to, conduct 6 house calls a day and basically hook up patients to random BS, with some arcane reports that the Wall Street Journal put out. Basically said for every house visit UnitedHealth made, they earned about $2,700 in revenue. Humana at $1,525, CVS Aetna 300 or 232. Anyway, so you could see the desire to conduct a lot of home visits. UnitedHealth did the most and make lots of money off that. Now the cat's out of the bag, and the federal government is the cat's out of the bag.
When was this done? Look at the timing. This was done during 2019 to 2021. So COVID, everything was under the microscope. People weren't getting to, at the time, get these surgeries done as well. You also had these home visits. People weren't supposed to go in unless you had major issues. And a lot of old people, a lot of people that, couldn't get in, they were going there and diagnosing them with stuff. There were people, my friend died of cancer that was in the Coast Guard because he didn't get access to these things and they caught it late. Okay. My friend that I literally, was in the Coast Guard with for years, and this is a younger guy, died of cancer. So brain cancer. And they said, yeah, we probably would have caught this early had there not been COVID. It was just one of those things. So they're doing home visits. Of course they're going to see that, Of course, they're going to be during this time. This was a crazy time. They're going to be doing a lot of home visits and finding people with issues.
Lots of money off that. Now the cat's out of the bag, and the federal government has said, look, we're not paying for some of these diagnoses anymore. You ripped off the system because now people have all these diagnoses that they didn't even know they had. Their doctors didn't even know they had.
Yeah, because they couldn't go into the doctor in the time. And my buddy didn't know he had brain cancer until it was too late. Yeah, that's what happens when you can't go into the doctors. And if you're scared to go into the doctors because of the whole COVID thing,
And they were never treated for, just so you can milk some free money. And so now obviously earnings. So what pieces are left? Well, again, It's a business that on a free cash flow basis yields about 7.5%, on their market cap. So yeah, the dip is sizable. But again, you're getting into a legally fraught and now a hated business with terribly low.
And it's not just, it's not hated. That's the thing, is like, there are hated, people hate things, obviously, companies all over. But for the most part, I don't think people hate UnitedHealth Group. They do a lot of good too. And yeah, if you look on only social media, you might be seeing people hating, but that's the thing, is you got to look to the future. Is this company, is it a bad company, or is it just a bad price right now? I think it's just a bad price stock. I think there's a lot of people don't understand the whole workings. I didn't even understand the entire system and how these things are coded and what all goes into it and what all UnitedHealth Group does.
Margins. Look, is this a great buy the dip opportunity?
We've heard this.
Business. I'll pick any other business.
Okay.
Man, it's not my world. I'll go stick to houses.
I'm going to say right here, I'm going to give it, it's just too passive. As Felix has covered some of my stuff before on his own channel. So yeah, it'll be nice to see what Felix says. And this is the first time I've watched any of these, by the way. So let's see.
UnitedHealth. You know that stock that's dropped like 50%? Well, guess who just bought it? Our friends in Washington just bought it, and I'm just literally checking into this hotel. But I was reading about it on the way, and I thought this is something you're going to want to know because there is something actionable in this. Now, the problem is that when a stock drops 50%, well, what actually happens if you want to make your money back? Well, the stock has to double in value. And
I like that he says that. I've got a chart that I always follow, and it's like when a stock drops 90, 99%, I mean, you need 900+% to get back to there. That's why a lot of these people are, the stock down 60%. When Meta was down at 88, people hated it. And a lot of the people that were talking so much, noise with it, saying it's going to go bankrupt, they sold at the bottom, and they were mad because they had bought at the top. And a lot of YouTubers talked to people and tell them they should buy at 300 plus at the time. So buying at the top and it goes down, there's going to be a lot of hate. And a lot of these people can just be wanting the company to go bankrupt because they lost money. So
people are all jumping over themselves and they're buying UNH because they think it's cheap. And one of my mentors told me very early on, never ever buy something because you think it's cheap. It's usually the worst reason.
Now this was June 4th, by the way. So this has been a little bit.
Reason to buy something. So I don't, and I haven't, although I'm somewhat tempted, and I'm going to try and plonk myself at this very nice, very large colonial desk here. Am I still in the picture? There we go. Something like that. But in all seriousness, what actually happened to UNH? Well, I actually made some notes of exactly what happened, and I'll walk you through why these guys are buying it and what they know. Because let's face it, if you're sitting in the House and you're sitting in all these committees and you know what's going to happen to Medicare, well, guess what? You probably got something ahead of us. So what do they actually know? Let's give you the highest value first. And so there is something called the Medicare Expansion Act, and that's an ongoing discussion. That would expand the eligibility or benefits. So that could increase the number of people UNH serves. But it could also come with some stricter reimbursement rules, which might not be super ideal for them.
Now, this is actually something like we covered just recently, and why the stock gapped up almost 5% the other day. And this was across the big healthcare stocks. And one of the things is a lot of some of the analysts actually expected next year this to be a little more, in a sense, not necessarily bearish, but not as good as they thought. And then some of the updates, they've actually said that they believe this will be a lot better. For next year, there'll be more people basically, and UnitedHealth Group is probably going to be a beneficiary the most of this.
But probably they would be rather well positioned from that. So that could be something that these guys know about that we don't know about. And the people buying, by the way, are good old Marjorie Taylor Greene, who seems to be always buying something. Just this is about to go up. And also Michael McCall. Now, they're both Republican. That doesn't mean that it's a political issue. It's just if you are in Washington, it seems you tend to use your insight for, the greater good of humanity and the welfare of orphans and kittens and all that sort of stuff. Have these guys made money on it? Well, it has gone up slightly, just as they bought it, but they haven't quite seen it recover back to where it needs to be. There is also something else out there, which is called the Anti-Racism in Public Health Act, which seems like an odd topic, but I don't know anything about this. It would basically just add a whole layer of administration to the whole the welfare thing, healthcare thing. And who actually wants a lot of administration and red tape and bother? Well, the market leader, the big guy. The people with billions of dollars of revenue want as much regulation as possible. And people often don't understand this. They think that big businesses don't want regulation. Big businesses lobby for regulation because it keeps the small businesses out, because it creates enormous compliance cost. And if you are starting out and you need to initially hire 6 full-time lawyers, well, you're probably not going to start out. It just means
that's a good take. Looking at it that way, I can see that. I don't think anyone's coming for they've got their moat. They're pretty much, it is too big to fail. Like, that's the great thing about the stock. That's why it's a super investing stock. You have companies that are pretty much holding this since the year 2000s. And you're not going to see this company go bankrupt. The government, they can't have that happen, right? There's a lot of people in the US that depend on this, 53 million, right? So it's not going to go bad. It's not going to go bankrupt anytime soon, unless, something crazy happens. But that's kind of a good way to look at it. I don't think that's too big of a thesis point, though.
A lot less competition out there. But is this a buy? Well, there's a couple of things you need to understand. First of all, what's the actual scandal? What are the accusations? Apparently denying health coverage to boost profits. Shock horror, like insurers would ever do such a thing, surely not. And also they paid money to nursing homes to reduce hospital transfers. So the way I read that is you're in a nursing home, you need to go to hospital because you're not in good shape, and they're going, nah, because the insurer doesn't want to pay for it, which is kind of crazy, right? So
now the other thing you got to look at, sometimes when these people are being sent in, they don't always need to go to the hospital. A lot of times you'll be sent to the hospital and they'll be like, here you go, you're fine. So when you have millions of people and this is happening, and you might hear about a few of these cases that they were turned away, or that they had to, pay the bill. A lot of times it's because they shouldn't have even went in. I'm not saying, each case is going to be this way, but you just got to look at it as a business and say, does everyone deserve it? No, because then the insurance companies, it'd be like in Florida when they can't pay anyone out because they go bankrupt, right? So because of the hurricanes, and what they faced is a black swan event. What UnitedHealth Group faced last year with the data breach, and with a lot of this pent up demand happening, and just all this happening all at once. And then, obviously all the publicity of what happened with one of their arms of their CEO of the health side. So it's like, you get all this and it's like, of course, that's why the stock's down 60%. Are they going to be able to, get the ship on the right course? Of course they are.
Essentially, that's probably criminal, and that's why there's a criminal investigation going on there. In addition to that, UnitedHealth missed their Q1 earnings. They withdrew their 4-year guidance, which means there are probably some fleas in that bed. And then the CEO resigned on May 13th with the Department of Justice investigation ongoing. So definitely not good.
Now, when the CEO resigns, that's a good thing, and they can get the previous CEO that's gone through all the crazy times, right? That's a great thing for a stock like this, because, as an investor, I'm like, I don't want the CEO in there when this was going down. And let's hope that, the investigation, it's going to be a slap on the wrist, or they don't find anything. They might not. And they've been very fast. By the way, we're going to touch on a few things at the end of this video with some updates to all this that we can go over. So make sure you watch till the very end. There's definitely a lot of interesting big funds buying, and they're hiding some things. So we got to talk about that. So stick around.
Now, you could, of course, argue that it can't get any worse. CEO retiring, financial problems, criminal investigations. Maybe this is the worst as it's going to get. But generally speaking, when companies withdraw their financial guidance completely, they're basically saying, we think our accounts might not be what we thought they were, which is a complete red flag. Like if you're a publicly listed company, you've got one job, right? Produce accounts that are good, right? If you don't...
Yeah, the reason right now he's too passive is you got to look into this, Felix. Like, really what's going on is they had these unforeseen black swans. And if you're investing, it's the same thing if you're looking at Meta. That's why I like to keep saying this, is you're looking at Meta, all this spending, you just look at their balance sheet and you don't understand that Mark Zuckerberg with super shares can end this spending, and they don't need to do this to increase revenue and free cash flow. It's like, what? If you just looked at it, the same thing here. If you just look at it, you're like, yeah, what's going on? But there were black swans. So it's a little lazy research. Wouldn't take too much to see
it's
this.
sort of all over from an investor point of view. So is this something we should be buying? You've got to ask yourself. And my answer here is very simple. Does it comply with your set of rules for the stocks you buy? Because there are more stocks I want to buy than I actually can buy. There are so many opportunities that I don't run after the latest thing that's in the news. Typically, I do the very opposite. I'm like, interesting, but let's not do it.
Not financial advice, obviously. I like that. But here's the thing. If you see a stock you like, and you're probably making as much money as these guys, and now my views on the channel, they're not at that yet, but we're going to get there. Now, if you're trying to invest in a company long-term, there's some really cheap options. Now, I'm not telling anyone to get any options, but there's really some cheap leaps. Like on SMR, if you would have bought literally probably about less than a year ago, some of these are up. They're literally, you could turn 5,000, 10,000 into $500,000. Okay, because the stocks have ran in nuclear energy. So if you see something of value, there are small plays. You don't have to buy 1 million shares. There are small plays in the options. And sometimes if I don't, really want to track a stock too much, sometimes I will get some options like that. And they don't even have to be a big position. And I've seen sometimes some of my biggest ones, my biggest gains were those. And I'm like, at the end, I'm like, why didn't I buy more? Okay.
Anything with this, because this is probably a red herring. This is probably something that's going to be very risky. And as I say, it's going to double in value to go back to where it was. So tough spot, I'd say. So despite the interest from Washington, which could be positive, of course, I'm staying out of this.
I was expecting hopefully Felix to tell me something I didn't know or shed some light. It's just too passive for me. Same as Kevin. Now these guys, obviously, who knows what they're really buying, right? They make money. Kevin's made 20 million from stock courses and views on YouTube at one point. So, and I'm sure Felix is doing pretty well. They don't got to trade at that point. So they just want to cover and talk about the stuff that you guys want to see. And, we're making videos about, right? This next one should be better. Now, Adam also called Meta with me at 88. I remember watching his video, invested November, was like those lows in 88 in 2022. And I think he made a few Meta videos. I remember watching them. It's very similar to this. Now, he was buying this UnitedHealth Group over 300 and I think 50. He was showing his averages, I think. So he's been covering this for a while. This is a recent video a few days ago. And I actually do like this. I've seen a little bit of it, but I'm going to give my commentary on it. And Adam's a smart guy. He does have shares in this. But, let's hear what he has to say.
2 months ago, I said that healthcare stocks were cheap. But you know what? They're even cheaper right now. So is it an even bigger opportunity? Or is it really a value trap that we need to be careful of? In particular, I'm going to look at two companies, UnitedHealth and Novo Nordisk, two fallen angels. So
now, we might not watch the full 26 minutes and I'll cut around this, but let's look at this. So we're just going to watch about UnitedHealth.
They rise again like a phoenix from the ashes, or are they dead dodo birds? Let's find out in this video. Chart should give you an idea.
Advice.
If you go to TradingView and you type in XLV.
So basically, right now, we're talking about the healthcare sector to the S&P 500. It's at pretty much 30-year lows, okay? So buy low or do you want to buy high? Everything else is high. Doesn't mean it's a good buy, but that's kind of where we're at.
Stocks keep going down forever, or will they rebound back to the mean? So it all depends on this question. Do you think that healthcare is dead, that no one needs healthcare anymore? Or do you think that healthcare is in a secular growth industry, but it's just going through a temporary cycling? Stock is down 50, 60, 70%. Whether you already own it or you don't, people always ask this question. Should I buy, right? Should I hold or should I cut loss and sell? What should I do? That's always the question that I get. And the answer to this question depends on two things, okay? Number one, the first thing it depends on is it a broken stock or is it a broken business? That's the first.
So this is good. I think, if I can remember, I think he was saying the same thing on the Meta type of videos he was making around the time I was buying. And it was nice to see because everyone else was bearish, right? At the time, even the YouTubers that told people to buy at 300 plus were bearish, making videos on it. Now, I remember Adam, I think he said the same thing.
The business has lost its competitive advantage. The business has gotten disrupted and the business sales are going
like Snapchat. Snapchat's a great example of a broken business now.
Down, profits are going down, they're losing money. Now that's called a broken business. Now, a broken business is something that you definitely do not want to hold. You do not want to.
Nope.
What's your judgment? So for me, as an investor, I do my best to have no biases. I look purely at the numbers rationally and unemotionally, all right? Okay. So
that's good. I'm going to say this is definitely at least A tier, okay, so far.
So let's take a look at UnitedHealth and let's take a look at the actual business. How are they actually doing? So first of all, you can see that they rank very high in predictability, very high in profitability. Their growth has slowed down, used to be very high, has slowed down, but again, I think it's temporary, and I'll explain why in a short while. Their economic moat is medium, all right? Financial strength very strong, and valuation is high, which means that it's very undervalued right now. Now, taking a look specifically at the financials, let's check it out, and okay, go to the bar chart, it's a bit easier to read, right? Okay, so first of all, are they still growing their revenues? That's the most important thing. Are they getting more and more customers? Are they getting more sales? Yeah, so revenue has been growing. That's not an issue. In fact, the last quarter, they also reported 16% growth in revenue year on year, which was a...
Yeah, and what was phenomenal is back, 2016, I think 2015, they were growing at like 30%. Like I said, I think that they're going to be able to cut the cost and they're going to obviously raise prices to grow. That's why these companies, I think, are solid businesses long-term, especially with paying the dividends.
Above expectations. How about profitability? Are they losing money? No, they're still making money. Although, again, the profit growth has slowed in the last few quarters, and we'll look at why in a while. Okay, so there we are. So over here you can see net income in green, that has been growing. We had a drop in 2024, and last 12 months, we can see it jump back up again. But there's another slight drop in these recent quarters, right? Net operating cash flow, that has been increasing as well. So you can see company is not losing money, company is making money. So it's not a broken business, okay? Now, how about the economic moat? Again, to me, that's the most important thing. And you can see the moat score
probably like
is a wide moat. Okay, this is according to the AI moat score, and you can see it's 8 out of 10, and that's because they are the dominant market leader in the health insurance managed care markets. So one of the most important parts of their moat is their economies of scale. So their scale is unmatched in the industry with 50 million insured lives and massive Optum operations. So Optum Health is basically their healthcare services.
Now with me, if I'm thinking of investing in a stock and I'm like, you know what, why am I investing in this? Are they going to make money and am I going to get money back? This company is going to make money and they're going to give money back to their investors. Very, long term, it's going to be very, very good too, because people are living longer. So how can you get more customers? Well, for one, you want them to be healthier, live longer. And if you do this, and that's what's going on right now, that is really the renaissance that's going on right now, to literally make people live longer, healthier. They're going to be paying insurance premiums and their costs are going to go down if they don't have as many diseases. So this is a golden swan event. And then if mega pharmaceutical companies have to make deals and literally lower their prices from 700-800% charging to us to down to literally 90% costs are down, you're going to see phenomenal outlooks for these stocks. A lot of these insurance companies are going to literally get the MCR costs down. It's going to be ridiculous, I think, when this actually happens. So, I do like that let's see if he actually talks about that though. He's talking about their economic scale and the moat, but I want to hear a little deeper.
Understand that UnitedHealth consists of both health insurance as well as healthcare management. So for example, they own specialty clinics, surgical centers that provide the healthcare when people make claims against the health insurance. So they own the different parts of the entire ecosystem. They've got high switching costs once you're in.
I just noticed both these guys are in private jets here, and he's with his 1 million subscriber plaque.
In that system, right, it's 7 out of 10. You've got very high barriers to entry. So it's a very, very strong business. Okay. So in that case, what's the problem? Why has the stock price dropped over 60%? There are two main issues that people are concerned with. Number one is the DOJ investigating the company for alleged Medicare fraud. So basically the company is accused of overbilling for their Medicare Advantage plans, where they say that these patients are sicker than they really are, so they charge more premiums on it. Now, is this something I'm concerned about? Not really. Why? The reason is because, first of all, they're only accused of it. There's no evidence that they are actually doing.
And if you understand, people get away with murder, right? People get away with murder. The companies that make the most in the world, they're constantly having litigation. Like this company, third in the US for revenue, they're going to be under litigation probably majority of the time. Now, they did settle the DOJ non-criminal, antitrust issue, and we'll talk about that later too. That's one of the things. So that is good. And I do see this administration pushing things through a lot faster. I'd rather just, the bad thing about a lot of stocks Meta had is it was a 13-month downturn. It was brutal. We saw Netflix drop 43% overnight and still the thing was down 70+%, 75%. This has been fast. This stock was just trading at $600+. They can turn things around really quick. And that's another reason why I really like this stock,
It's systemically, okay? Now, even if they are charged with this fraud, I'm also not concerned. And the reason is because if you look at history, there are many companies who have been accused and charged with fraud 10 times worse than this, and those companies have done very well. And I'll give you two examples. The first example is Wells Fargo, which is one of the biggest regional.
Which is funny because I'd banked with them during this time, and I brought a large amount of money to deposit at one of these branches. And it was kind of funny how the guy acted, I remember. And I'm sure he might have been one of the ones involved in, inflating and making fake accounts. So they treated us really good when we came in there because we had actually switched from Bank of America. They were a horrible bank at the time. And come to find out, look what was going on. They were probably one of the worst financial type situations for fraud in history, right? In modern day history.
Regional banks in America, and this was owned by Warren Buffett at the time. So what happened in 2016 was that the scandal blew up, and it was revealed that the employees of Wells Fargo opened millions of fake customer accounts, millions of unauthorized accounts in order to meet their sales targets.
So long story short, the company was slapped on the wrist. There was a few $1 billion fines, and look where the stock's at. It's up 121%. past performance, not indicative of future results. Doesn't mean this is going to happen with UnitedHealth Group. Doesn't mean UnitedHealth Group's even going to be charged or fined, because they might not. Now, this stuff is hard to prove, I think, especially with, the medical side, because there's a lot more to it. These people were straight up creating fake accounts, selling data, I think, and like literally it's all fraud. There was a lot of issues because the people were underpaid and they said that's why they were doing it. So yeah, I don't think that's the case with UnitedHealth Group.
Charged, and they will fine. Who the hell cares, right? Just pay.
That was another
recall, in 2016, they allowed this company, Cambridge Analytica.
Oh, Facebook. See, this is talking. See, a lot of people don't even know this. I don't even think that, and there's still an investigation, right now with Meta that's could affect its entire moat right now. Like Mark Zuckerberg was just in front of Congress. It's funny because a lot of bears have told me, don't compare it to Meta because Meta would never face criminal investigation. And I'm like, are you kidding me? Do you know? Have you lived in the same realm that we live in? Because Mark Zuckerberg, there's memes of him sitting in front of Congress and they're reaming for so many worse things, like very, very sad things too that went on, right? On Meta, Facebook.
To illegally get millions and millions of personal data from Facebook users, and they used it in the political advertising campaign that helped Trump win in 2016. So they were slapped a huge fine. And then in 2021, they were accused of promoting human trafficking and domestic servitude, of which I believe they also paid a fine for that. And then there was a huge boycott against Facebook at the time.
And at the time, I actually deleted my Facebook, my Meta Facebook. The only reason I got it back is because family used it. Now, I don't really use Facebook. I use Instagram. This stock literally from the bottom is up almost 750, 800, plus percent from this bottom here. The cool thing is Adam also saw the value. So right now he's getting an A tier for sure. Better than most analysts. A lot of the analysts giving the downgrades right now, going and look at them, they've got like less than 1%, for calling stocks and actually being right. A horrible track record for a lot of people. And the great thing is Adam has been very right. And he's right now, from what I see, from what I remember, there's not a lot that phases him, and he's just very real. He looks at things at a hedge fund manager, a really smart type hedge fund manager view, where you're not just looking at the numbers and you're really trying to see, why is this happening? Is it going to change? And got to be forward looking, right? And he's been doing really well because of that.
Facebook shares slide as Starbucks joins major global brands in social media ad spending boycott. So many of the major brands all boycotted Facebook, saying that they're evil company and so on and so forth, right? And people say, well, delete my...
That's a big thing because, it was literally at the time, I think, Starbucks and a bunch of these. Yeah, Starbucks. So Starbucks, there were some other companies that were boycotting them. That's their whole revenue stream. Like that's their bread and butter. When I went into this 2022, October, I said, Instagram's not even doing the full ads that they're going to do. And they paid $1 billion for it. And they made, $46 billion in ad revenue just from that. And I was like, geez, this is phenomenal. This is going to keep growing. And it was right. They were, their revenue is like crazy now. And the free cash flow is way more than UnitedHealth Group. So it was the right play. But when you heard this and you heard companies were going to boycott them, and you heard people obviously just couldn't stand it. I even deleted my Facebook at the time. And it was really because I didn't even use it. And I was like, you know what? This is dumb. I don't want to have my data on there and everything. But you know what? I had to, when I invest in it, say, you know what? My political beliefs and whatever it might be, put it behind me and say, hey, is this a good is this a company that I can make money on? And you could find there's skeletons in every single company's closet. You're not going to find any company that's publicly listed that hasn't had issues, that isn't morally doing wrong. And, just if people are buying iPhones, just know that there's a lot of issues with the people who make them, and mind the stuff that makes them. And, you act like you are higher than everything. And that's usually where a fall comes. That's where people's downfall, and anyone just investing on emotions is not going to do well in the market.
And since then, Facebook, or now Meta, is up 4. Yep. And the main issue is that while their sales have gone up and have done well, but their costs have risen more than expected, causing a short-term
MCR. Yep. It's like 89%.
Drop in the profits. That is the main reason why the stock price has dropped so much.
That is true because, when this investigation happened, this thing was already starting to get back into the 300s, and I think funds were probably starting to come back too that had sold that record amount of selling. when this first came out and the drop happened. So yeah, it's all about outlook in the market. Even though their trailing 12 months is like 24 plus billion free cash flow, it's really about that outlook.
In their last earnings report, which was a few days ago, UnitedHealth showed that their sales revenue grew at 16% year on year at 11.62 billion. So this was better than expected. So you can see that the business itself is getting more customers. That's not a problem, right? And in fact, it was better than expected. However, what shocked the market and what caused the share price to drop was that their earnings per share came in at $4, which was lower than the $4.45 anticipated.
No, I don't think that was the one. Come on. You know what it is.
But the worst news was their 2025 guidance, where the company said that
it's the guidance. It always is the guidance. Come on. Because markets are forward looking. And if they hear, like, that's the thing is if I was a short and I hear the guidance is down, boom, max short, right? Because the stock's going to gap down on that in this market, right? Back in Netflix in 2022, it dropped 43% because the market was like, oh, when they said, yeah, our subscriber numbers are going down. And this was a temporary blip. And you know what? Boom. And that was when I was like, you know what? I was telling my wife, we were in the store and I was like, look at this is ridiculous. We had known too, I was in the industry, so I knew that like they had some great stuff coming in. You know, a lot of their stuff, people are starting to watch from Korea and overseas and they're dubbing it and they're doing good. And I was like, this is gonna change. And yeah, I was right too. It was a great time. It was one of the best times. In fact, I think it was better in 2020 buying these lows because companies were doing really good. It's just the market would just punish you like horrible for earnings. And they're starting to do that again. Amazon was down a bunch as well recently on earnings.
For this year, they expect that their earnings per share will come in at $16. People went, oh my God, we're gonna die. $16 is way below what was expected, where the market expected their earnings per share to come in at $20. And in fact, in 2023, their earnings per share was $23. So this represents a 30% drop in their profitability, right? So in other words, the main problem again, revenue going up, no problem. The problem is that their profits are dropping 30%.
And let's hope he explains why, because there's reasons for these things happening, right?
Compared to 1-2 years ago. So why has this happened? It's because of an increase in their medical care ratio, or also known as the medical loss ratio, that went from 80% to 89%. So this is the problem. So what is the medical care ratio? The medical care ratio or medical loss ratio, same thing, represents the percentage of the premium revenue they collect that an insurer spends on medical claims and healthcare services for its members. So let me put it very simply. So UnitedHealth, they sell health insurance, they collect premiums, right? So let's say, for example, they collect $100 in premiums. Now, for all the people who pay the premiums, some of them are going to make a medical claim and say, you know, I injured my leg, I need to go for surgery and all that. So when they make a claim, what happens? UnitedHealth has to pay for those medical expenses. And that's called the medical cost, right? So let's say the medical costs in general cost, let's say $80 per person. So does UnitedHealth make money? Yeah. They collect $100 in premiums. They pay $80 in medical claims. They make $20. So historically, they did very well based on this ratio. And so historically, their medical loss ratio was 80%. Now, the problem is that in the last few quarters, in the last few years, this has gone up more than expected. So instead of spending $80 on claims.
Now, since I love to compare this to Meta, what is this 89? Well, guess what? That 9% is just like with Meta, the spending for the metaverse that they didn't need to do. It was also the people that they needed to fire. And that was one of my thesis. I was like, when I bought it, I said, I hope Mark Zuckerberg fires all these people. And I literally had video of people who basically said they were scamming the system. They basically weren't working all day. And I was like, you don't need them. And AI was another part of the thesis. Like a lot of these companies could use AI for a lot of what happens with coding and everything as well. Now you still need people obviously for this, but that was one of the things. Well, guess what the 9% for this is? That's that. It's that they were complacent and didn't raise the cost to where they should because they didn't account for it because of the black swan, that they had. And the big thing is this cost went up because all these people are getting more surgeries, and I don't even think companies are still realizing this. And from what I've seen, it looks like AI, and from my own experiences with my wife's doctor and the doctors, they are pushing people in as fast as they can and diagnosing people at a record rate for things that normally they wouldn't have caught, potentially x-rays, all these things. So that right there is an upfront cost. But guess what? When all that's done, it's going to drop like crazy. And when the market sees that, and not only that, but we talked about the pharmaceutical costs dropping, and next year they're able to raise the rates for this, that ratio could come under 80%. And when that happens, I think the stock could go to $1,000+ long term. And you're going to lock up most of the float with dividend investors that have been buying this since the year 2000.
Because of inflation has increased medical costs, and many people delayed their surgeries because of COVID. So there's a backlog issue. There's a catch up where a lot of people are now going for their surgeries.
That's right here. See, that is almost in this tier. Okay. Him saying that and him and I crossing streams again, Ghostbuster reference. When I see Adam saying the same things I'm seeing and saying, because he said the same stuff about Meta, a lot of stuff that people weren't expecting in how fast they could turn it around. That is literally S tier. That stuff Warren Buffett, that stuff, we've seen Michael Burry be able to see, whether it's short or long, right? Being able to see things people can't. Now that's
increase
big.
The medical claims from $80 to $89. And the problem is that UnitedHealth did not raise their premiums enough because they underestimated the increase in medical claims. And so because their premiums are only at $100, instead of making $20 profit, now their profit is only 100 minus 89. They're only making $11 in profit. Hence, their earnings have dropped. You see the problem? So that's the problem. Now,
and what I do like about Adam too is he's telling this in the most basic way, literally drawing 100 and an 80 on there. This is what smart people do. Like, smart people don't try to act smart. And like, you hear these analysts on the call and like, yeah, I have an MBA, I went to Harvard, and I'm saying the MCR and this is, and they're trying to do all these ratios that are literally this long, these ratios that, to get through school, you have to learn, but you're never going to use them again, because these guys, when they're using these ratios, they're literally picking stocks and giving downgrades, and they're literally giving a downgrade at the bottom of Meta. A lot of these people were, and they are projecting it to be a failing business. Like, no, you got to pull your head out of the sand and you got to understand how life really works. Okay. It's, unzip your Patagonia jacket and get out in the real world and understand what's going on.
The question is this a short-term problem or is this a long-term problem? The answer is this is a short-term problem. Why? Because these health insurance companies, UnitedHealth, Elevance Health, they will and they can raise their premiums in the next few quarters in order to get back that $20 profit margin. So
now they don't even have to hit the next quarter to project their free cash flow and earnings higher, right? They literally can talk about what's going to happen potentially with these, in a bullish way, with the cost coming down. If Trump does make a bunch of deals with Pfizer and some other companies next week because he's starting these tariffs, they're going to have a different outlook, and so are the analysts. This is going to be a positive tailwind, and it could be a golden swan. If they could get this under 80%, like I said, it's going to be ridiculous. It's going to move like Meta. It'll move up like Meta did very fast.
They're already in the plans to increase their premiums to, let's say, $110. So once they increase to $110, right, then their medical care ratio will then drop back down to 80% where it was historically.
Yeah, and they're going to do this. They are doing this. They have to do this. They should have been doing it before. But what you got to remember too is these other costs are going to be coming down. I think the new CFO coming in, I think he's going to hopefully pull what Meta pulled, and, get rid of the people that maybe were denying people. Maybe these were the bad people that, didn't like their job and they were rude and bad people. That could have been the thing too. But if they actually get rid of people, the bloat they don't need, replace it with AI. And they did say this in their I've read before in their 10K that they don't want to replace people 100%, but they will be more efficient. And this will help them find the fraud as well. And they're going to save a lot of money on that.
And their profits will then rebound. That problem solved. I'm serious. It's as simple as that. So in fact, let me show you this next chart over here. You can see this is their medical loss ratio, which I just explained. It used to be below 80%, and then it's been going up. It came down a bit, and now it's 85%, 89%. So, and again, the main reason.
Now, there were still a lot of cost for this time during COVID. Everyone was getting vaccines. These things were expensive. So it probably balanced out people, like we talked about before, not going in and maybe not getting the surgery they would have got. So I think it did balance out. But then, you even had a drop here. But one of the things is you had this huge pent up demand start to come up because of that. So I think that's that kind of blip that's that type of, metaverse spending that can be cut real quick.
And it's because UnitedHealth, a few years ago, they did not expect the increase in medical costs. So they did not price their premiums accurately. And so now they are not making as much as they should. So once they adjust the premiums up, same as Elevance Health, their profits will rebound. Now, question is, how much will it rebound? So we expect that for this year, their earnings will drop by 30%. That's what the management has said. But they said that next year, they expect to adjust the premiums and their profits should grow between 7 to 9%. And in 2027, they expect to grow their profits at 11 to 13%. And in 2028, 13% to 16%. Now, historically, their earnings have grown at 10.47%. So the management believes that once they readjust the premiums, they should go back to their long-term growth of 10.47%.
And that's
if you take a look at this Wall Street Journal.
The crazy thing, that's not even implementing what I talk about, the mega costs that they can do, because this is going to be a big thing. Like, honestly, if next year, if these companies don't, they're going to get destroyed. Any healthcare company, they're going to get shorted to oblivion, because there's going to be 250% tariffs next year at the max for next year. If these companies that are importing pharmaceuticals to the US, if they don't make new deals and give us a fair price, and we're not even trying to undercut them like crazy, but if they don't do that, these tariffs are going to be ridiculous, and we're going to get it back in some way. So these companies are not going to, at the peak of the market, want to have a drop like UnitedHealth Group. And we're already starting to see some of these companies, their outlooks are changing. They're already getting hit hard. So imagine if they're like, yeah, we're getting screwed by the government. These tariffs are crazy. Oh my gosh, everyone's going to short them too, because they're the ones really that are causing a lot of these issues. Same thing, like, you've looked at, it's really a simple fix. Make a deal, pay it, let us pay the right prices, and boom.
Report recently, you can see that that's what they're doing, right? If you buy your own health insurance, you are probably going to pay more next year, a lot more, because insurers like UnitedHealth, Elevance Health are seeking hefty 2026 premium rate increases for the Affordable Care Act marketplace. The company say that the big increases are needed because of higher healthcare costs and changing federal policy. What is the intrinsic value of—
So that was great. I think there's more to his other one, but he kind of goes into some of the other stocks. I think that's pretty much really all you need to hear. That's, maybe I'm giving that a little bit too high. I'd say it's right in between. Some of the stuff he was saying started to get on that level. We'll reserve this for future times. The thing is, now, if we did find bottom on this and all these things come into fruition, then obviously it's going to be like, oh, this was S tier. But right now, I think it's better than 90% of the analysts out there. Next, we've got two more, Everything Money. Now, these are very short. I think these are like 6 minutes each after you cut out a few things. And then we'll do one more after that.
Back in the early 1960s, Warren Buffett bought American Express during one of the biggest financial scandals of all time, where barrels of oil were filled with water instead of oil, and it almost came close to eliminating American Express completely.
Kind of sounds like Wells Fargo, right? Millions of their growth of these accounts were literally fake, right? And it was, fraud. So
is UnitedHealthcare the same thing today? Is there a possibility this could be the opportunity of a lifetime for people who understand UnitedHealthcare? UNH, UnitedHealthcare, is down.
UnitedHealth Group. It's the group, because a lot of people are like UnitedHealthcare CEO, blah, blah, like the health side. It's the group. But anyways.
Down over 50% in the last 5 or 6 weeks. Why? Because of scandal. Now, they've been hit hard in the last year. They had a CEO basically get assassinated in front of a hotel. And now they're being hit with some scandal about Medicare, Medicaid. And even today, there's evidence and there's talk about this, that the insurer secretly paid nursing homes to reduce hospital transfers. Is there merit to this? I don't know. But the point is, they've had to readjust all their future expectations because of this. Now, Medicare and all these Medicaid, that accounts for 55% of their business. The extreme is, it's proven they were defrauding the government and they could lose 55% of their business. That's big. Now, what I'm about
they would never lose the 55% of their business.
To say does not mean go buy UNH. I'm going to tell you a story about something that happened in the past, and I'm going to relate it to today with UnitedHealthcare. It doesn't mean UnitedHealthcare is a business to buy. What I'm trying to show here is this is how investors make a lot of money. Can you look at a situation in which a company is being beaten up, but it's being beaten up way more than it should be? So look at this business. Let's say 55% of their business is Medicare, Medicaid.
And by the way, this was 2 months ago. So a lot of these people did buy. I know he bought higher. None of them bought. I don't know if he's going to buy Everything Money, but Adam was buying. So he bought in the 350s. So you get it cheaper than him. So let's see.
How much of that's profit? Is it highly profitable? Not very profitable? Is it a bigger percentage of their profit or a lower percentage? Let's say, for example, that 55% only generated 20% of their profit. well, if the stock falls 50% and it was reasonably valued before, you would sit there and say, well, wait a second, why do I care? Yeah, the stock's down 50%, but they're only going to lose 20% of their profit. Let's just move on from this. That's an opportunity to look at. But what happens in the markets is people get scared and they see this kind of thing happen, where you see a stock fall and continue to fall. It's down even more, about 5% today. And
one of the other things I think people need to understand about the market, and this is another thing, you got to learn how the market works. Back then, literally in the 80s when we had the drop too. Now I know this is 1920s and stuff. That's the big crash, right? But in the 80s, it was like T+5. It took like 5 days for a trade and everything to settle. So you had all these issues, especially because the 80s, there was the problem with the drop with, derivatives. And you had all these issues, and there was insurance as well. It was one of the main things. Portfolio insurance would cause this. So we're in a different time where it's T+1. Okay. So I think if we do have drops, they're going to be bought up pretty quick in the overall market, right? People there's 6-7 trillion plus on the sidelines. So when money market funds come down, they're going to look for a home, and they're going to look for a stock like this. Now let's see what he has to say, by the way. So it's great to know market history and know mechanics and what's really going on under the hood.
see a stock fall and continue to fall. It's down even more, about 5% today. And this is it in the last 6 months.
So it's 305, and we're right now at literally 250. So good stuff. Good stuff. I like buying lower than these YouTubers putting out stuff.
Just an absolute plummet here. And news follows the stock price. This is what happens, and this is what makes it scary. Now, there have been early signs of trouble. In December, the high-ranking UnitedHealth executive was fatally shot in New York City, raising concerns about leadership stability. Okay, January 12, 2025, reports surfaced about increased medical costs and utilization rates, particularly among their Medicare Advantage members, hinting at potential financial pressures. March and April this year, financial warning and leadership changes. And then on the 17th of April, UNH reports a significant miss in first quarter earnings, attributing it to a higher than expected medical costs due to increased care utilization by seniors. The company slashed its full year 2025 earnings guidance, leading to a 22.5% drop in stock price, the largest single day decline since.
To get on the A tier, I'd say you gotta tell me something that I don't know or surprise me in the thesis in another way. And it could be a bearish thing. It could be like, oh man, I didn't even think about that. It doesn't have to be a positive thing. You know, just because he's bullish and he owns it doesn't mean I'm going to put him higher. Okay, so let's see.
1998. Now all these analysts come out, they start downgrading the stock, citing concerns over earnings visibility, yada, yada, yada. News follows the stock price. Where were analysts before then saying, hey, things aren't adding up? This is what's starting to happen. May 13th, CEO Andrew Whitty resigns unexpectedly, and the former CEO, Stephen Helmsley, returns to lead the company, and UNH suspends its 2025 financial guidance, citing ongoing uncertainties. And then in May 15th, reports emerge that the U.S. Justice Department is conducting a criminal investigation into their Medicare Advantage billing practices. The stock plunges another 16.5%. And then now The Guardian reports this. Another blow to the company. Now, guys, let me tell you another story. Back in the early 60s, American Express was a credit card business and it wasn't doing very well. And they had a subsidiary. That subsidiary was giving another company named Allied loans on its oil holdings. I don't know the exact story.
I am learning about this, so that I'd say this is a good type thing. Maybe I need one more tier in here because, you know, better than 90% analysts. But to be fair, you don't have to actually be that good to be better than 90% of the analysts, because a lot of them, they're really bad, guys. They're really bad. They're such lagging indicators. It's kind of sad. I also like this. That's pretty good. But yeah, let's see.
Exactly who's what and et cetera. But the bottom line was this. This company would borrow money and it would show their oil, their barrels of oil, and say, come test them out. And they would say, okay, give us money based on these oil barrels because they're assets. They're sitting here. If oil prices go up, they're worth a lot more money. So they'd give these guys all these certifications. Yeah, you got this much oil. And then one day the CEO gets a phone call from a hidden voice, says, listen.
The difference though, if I am taking the rebuttal, the opposite side, right? Back then it was like a slap on the wrist. You didn't even get fined as a company, a public company, for insider trading. I don't know if a lot of people know this, but it was nothing. Cost of doing business is what they called it back then. So there was insiders trading all the time. There were literally people that would call hot desks and ask for insider info on stocks and information. And these were hedge funds calling these hot desks, right? These info, basically they would give them insider information a lot of times. And these people were highly, highly paid, and the fines they got were nothing, right? So you just you committed fraud because that was just a part of doing business. Everyone's doing it, so you did it too. And that's what a lot of these hedge funds and companies, they were able to build their businesses and grow because of fraud. That's the sad thing. In the past, looking at it, you got to know that things have changed a lot And back then, yeah, you could get slapped on the wrist and it wasn't even a big deal. It wasn't a big financial hit potentially, you know?
These oil barrels, they're just full of water. There's no oil in them. They're just full of water. They did a quick test and they weren't able to get in some of these oil barrels. They were able to get in 5 of them. And those 5 were all water. When they finally opened up the other ones, they realized there was a ton of water in there. So what does that mean? You might be wondering, what does it do anything? Well, if your bar is
probably what Fort Knox looks like right now. There's probably no gold in there, you know? Probably not. I'm waiting for that audit.
you're lending money out to a company based on them having a bunch of oil and there's no oil in there, what do you have? You have water. What's that oil barrel worth now? Now, what was the potential liability to...
The other thing is, I bet you the company had the oil. They were just utilizing, and they probably, like banks, they're supposed to keep like 10%. You go in, if everyone tried to get their money out, no one could do that because the bank doesn't keep more than like 10% on hand, right? All this money, they're loaning it out. They're loaning your money out to people to earn more money and earn interest. So yeah, this happens. That's probably what was happening with the oil, to be fair. I don't think all their oil was water. They probably were just doing that to say, you know what, we got it. We're not going to need it. They're not going to take delivery of this oil. So yeah, that's the other side of it.
The company that was a subsidiary of Amex that was giving these certifications saying there were X amount of barrels of oil. Well, that liability was 180 million or so. At the time, American Express was worth about 160 million. So it was far greater than American Express, but it was a subsidiary. So the question was, is American Express on the hook for this? The stock plummeted. The stock absolutely collapsed. This is supposed to sound familiar to UNH. It's familiar in the sense of
50%. Okay. And did Buffett actually go in hand over fist and buy it? Terrible
thing happened attached to a company. How much responsibility does the company have? UNH, they've been accused of Medicare fraud. How much of this is true? Is there some other thing going on here? Can they actually fix it? We don't know. Well, Warren Buffett, in his infinite wisdom, thought this is not going to work out poorly for American Express. I can buy a great company at a great price, and he went and bought it. And he's owned the shares since. Now, it worked out for them. I'm not saying it's going to work out for UNH, but the same thinking has to happen. Just because something is down a lot, just because there's scandal, 1, doesn't make it true. And 2, even if it's true, has the market overreacted? This is a very, very quick reaction here.
Very quick. I love quick reactions. And you know what? When you can get a company that can pretty much turn this around pretty quick as too, that's where you see phenomenal gains. And I think I honestly, I have certain positions, they're not shares, it's leaps, multi-years out. If I was holding shares, I wouldn't even probably look at the stock price if I wasn't covering it like this, because I would know long-term that, long-term, this is almost a done deal. That's why we're starting to see the numbers come in with funds, actually big funds buying, and the percentage of institutions that held all the shares, 90%, it hasn't been really going down. So maybe a lot of this was retail. A lot of retail is the one that you're going to scare out of this. A lot of retail, a lot of people are like, capitulating at the bottom. A lot of people, retail, this is the thing, retail dividend investors, a lot of non-big institutional investors, they probably had this because it was a safe dividend and the same reasons we talked about. And you know what? They probably dumped when they saw this, and maybe they're still have been dumping, but it's starting to look like this kind of double bottom in the 250 area that we might actually start to see, starting to kind of play out right here.
Overreactive. Remember, if we can be overvalued on the top side, we can be undervalued on the bottom side. And people are very emotional. When people start selling, the stock just spirals. The question is the overreaction too much? Again, I'll repeat till I'm blue in the face. I am not saying that this will work out for UNH the same way it did for American Express. But there are similarities in the sense of scandal, big stock hit. At least with that one, at least with American Express, there was a chance they were on the hook for a value much greater than their entire market cap. I don't know if that's the case here with UnitedHealth. I've done zero investigation. There's just knowing what's going on.
Oh, man, do I put it? Did zero investigation of it? Oh, man, I do need a third tier here. Oh, man.
The high levels of it. But you must know this to see if there's opportunity here, because there could be opportunity. Why? Well, look at this. It's selling for 11 times free cash flow and 12 times earnings. Yes, those are going to get beaten up here pretty quickly. But if it's just fear going out there because of the Justice Department thing, and it's just, listen, I know people have been accused of things, and guess what? A lot of times the government makes it a lot worse than it actually is as a way of getting people to plea down and to agree to fines. They're going to make it sound way worse than it is. And again, I'm not saying it's better, but they brought the old CEO back, the back executive team, and hopefully this person is like Warren Buffett and says, we're going to fix this mistake. I don't know how it's going to play out, but I do encourage people who can understand this industry.
By the way, this is 2 months ago. So it was a 305 or so. So it's game down 237. That's when I started covering it. Maybe I found the bottom again. I've been lucky before. I don't always find the bottom, but a lot of times lately I've been really waiting. I did see this and I said, you know what, I just want to, wait a couple months. And that's kind of what I did. The same thing with Meta, the same thing. And thankfully, this has happened because it's dropped a little more. I was able to start to really build a good position. And goodness, the price drop from those leaps from even here down to where it is now, it's just such a better long-term play. Being able to get in so cheap. Intrinsic value is super low too.
To take a deeper look. If you understand Medicare, all these insurance business, you need to take a look at this. And even if you don't take a look at this, I want you to remember the story because there will be a company someday that you probably do understand better that is hit with something like this. Is it temporary or is it permanent? I don't know where it is with UNH. If this is permanent and it could bury the business completely, that's something you need to understand. But if it's over exaggeration, these are the times when big wealth can be made. This is the times when buying a stock like this at the right price can generate a lot of profit. Is that today? I have no idea. I am not an insurance expert. But what I do understand is people tend to overreact. Is this an overreaction? I don't know. You know why? Let's pull up a company we were just talking about right before we recorded this video. Workhorse. Let's look at Workhorse. Workhorse is a company, a car company. And I believe in this company so much, even if they don't get go literally hit grand slam after grand slam after grand slam, it was literally impossible for it to happen. Did I think it was going to fall 99.99%? I won't say that. But we sat there and said, there's nothing behind this company. Now, this fall, to a person who just cares about price, better than it was 5-6 years ago. That's the key. It's understanding about price versus value. That's what you need to remember with UnitedHealthcare and with any company you buy. This is an extremely important learning lesson. And it's something you have to understand as you see stocks fall.
I wish people would also say the right name of the stock. Like I saw a couple YouTubers, they're not in this. They didn't even make the list, but they were saying that the UnitedHealth Group CEO was the one murdered. And they're like, that's why it's down because their CEO was murdered and they had to find it. No, that wasn't their CEO. I've seen hedge fund managers say the same thing with other stocks, PayPal, where they thought Venmo was PayPal's competition when PayPal owns Venmo. This is a hedge fund founder on TV. So yeah, it doesn't always mean that people know what they're talking about. Let's see what else.
Because when we do finally have a bad bear market, and it will happen eventually, we're not going to go the rest of our lives without a bad bear market. When we do have one, that'll be the chance for you to be able to buy great companies at better prices.
That is true. I mean,
if you want to make good money buying great companies at better prices, there's a way to take your cash and be able to get 10-15% returns on that cash, buying the companies or ETFs you love at lower prices.
I mean, that's really where long-term, you can hold these stocks for long-term. That's really where you're going to find these opportunities like this, or when we have an overall market crash. I honestly think though that when we see another big market crash, it's probably going to be pretty big. I think the next one. But I think that it's going to recover pretty fast too. Maybe not as fast as we've seen like in April, obviously not. But T+1, I think a lot of people, a lot of money on the sidelines, rates start coming down. Where else is money going to go? And, people are also going to want to buy this dip, and a lot of the good stocks. Nvidia, can people even, and because of a lot of the splits, that's where a lot of these companies, it can hurt them pretty bad if they've done a big split. We've seen that happen actually with Tesla. So if a stock drops 60, 70, 80% and they've done multiple splits, it's going to hurt for people who held on, obviously, when that happens. But if you can buy into it, oh my goodness, you can get even potentially a better deal than you would have got if Tesla was, $4,000, because, even though it's a 10% drop, people might want to start buying it because it's like, wow, it's at this price. It's at 2,000. It was just 4,000. So yeah, especially with retail is on a different, wavelength when it comes to a lot of people. They don't look at market caps. They just look at stock prices and they don't even understand. I know a lot of people that have been doing it a while will still just talk about the price. And it's like, and I pull the chart back and I'm like, dude, the market cap, it's massive compared to what it used to be. And they've done a reverse split. That's why it looks like this. And these are people who usually know about stocks and they don't even sometimes look at that. So yeah, I would say it's still here. You're almost in this area because you are comparing and taught me something, but you didn't even look really into UnitedHealth Group. So you're too passive. These guys have millions of subscribers here, 300,000-400,000 here. And he's at what? 200,000, 300,000, 323. So last one, Joseph Carlson. This isn't very long. This literally, I think his goes to, it's not even here. It's literally right here. So less than 4 minutes. But let's hear what he has to say.
The type of report that many of us heard on UnitedHealth
2 months ago.
They reported earnings and the stock dropped dramatically, 28% in a single day. The CEO abruptly either quit his job or was fired, and the company lowered their earnings estimates dramatically. On top of that, the company noted that in terms of forecast, it won't be growing this year. And as you
Kind of reminds me of Mark Zuckerberg, the way he talks.
heard it briefly mentioned here, all of this chaos was a result of them underestimating medical costs. The damage that's been done to United Healthcare is dramatic. The stock
Health Group.
is down by 41% over the trailing 1 year. From its peak,
It's 50 something now because, yeah, the price here, it's dropped a bunch, since then.
just recently, it was trading at almost $600 per share, and now it trades at $311, going down nearly 50% from its peak. Whenever a stock drops 50% in only a matter of months, there has to be a rapid degradation of the narrative. That's the overarching theme. Investors need a sour on the company, pessimism needs to abound. In the case of UnitedHealth Group, this stock has had multiple facets to the degrading of its narrative, one of them being the abrupt departure of the CEO. It's never a good sign when a CEO leaves without any prior warning. Usually with large companies like this, there's a transition period, a period of passing the baton.
The other thing is, obviously, the board's going to say, you're going to step down. We need this because that's one of the check marks. Because guess what? If you're involved in this, you're at the helm. This happens in the military all the time. That doesn't mean he did anything, but guess what? It's going to help ease the market, right? That's what the board's pretty much going to be calling for. The previous CEO that really enjoys this, who I've been hearing is sleeping in their office on the floor and stuff to really fix this up. That's what I like to hear. And that's what we got. CEOs that got them through the global financial crisis and drops. So that's a good thing.
From one leader to the next. That didn't happen in this case. The other part of this is the earnings revision. Investors like companies where margins are increasing over time. That's one of the biggest indicators to a stock price going up. Of course, there are exceptions to this rule, but overwhelmingly, when margins are going up for a company, the stock price will usually increase. In the case of UnitedHealth Group, this company revised its earnings per share projection from $30 per share, which is what it was at the beginning of the year, to now $25 per share, going down around 17%.
I don't think I've ever watched a Joseph Carlson video. I've seen him, across the board, and I think let's see if he actually digs in. I hope he does at least dig in a little bit on this if you're going to talk about it.
In a single quarter. So how did we get here? How did all this unravel for UnitedHealth Group? Well, it's like Joe Kernan on CNBC said, they simply underestimated their health expenses. To be more specific, this entire event revolves around what's called the Medicare Advantage Plan. The Medicare Advantage plans are designed by private companies, ones like UnitedHealth Group or Elevance or Humana, these different health insurers, and they're specifically targeting typically elderly people above 65 years old that have Medicaid. So these are insurance plans for those groups of people. Now, the way that this works is important. Each year,
No, that's Medicare. Medicaid is for low-income people.
the insurers submit bids to a government agency.
Joseph Carlson already thinks Medicaid is for people 65 and older. Medicare and Medicaid are both government-funded healthcare programs in the U.S., but they differ. So Medicare eligibility, individuals 65 or older. Okay. When you see Medicaid eligibility, a joint federal and state program for people with limited income and resources, including low-income families, pregnant women, children, and people with disabilities. Eligibility criteria and benefits vary by state.
And they're specifically targeting typically elderly people above 65 years old that have Medicaid. So these are insurance
Medicare.
plans for those groups of people. Now, the way that this works is important. Each year, the insurers submit bids to a government agency called the Center for Medicare and Medicaid Services, CMS, estimating the coverage of a typical Medicare Advantage member. Now, these bids are based on actuary models. They factor in things like medical costs, utilization trends, regulatory changes, bonus payments, their star rating, and so on.
Sounds like it was written by ChatGPT.
So they factor in all this different information, but the important thing here is for investors to know that if your company gets this wrong, if UnitedHealth Group gives the wrong estimates, it's not the customer that eats the cost, it's the company. So for example, if they were to bid far too low for the Medicare Advantage plans in order to get a lot of business, they will eat the difference between the actual costs and their bid. Over the past couple of years, all these different insurance companies like UnitedHealth Group, Humana, Elevance, so on, they are all trying to gain customers by bidding for these Medicare Advantage plans, aggressively competing with each other, offering lower premiums to customers. And they're doing this to try to gain market share. Well, the way that they were pricing this was based on historical data. There's always a couple-year delay to where they get what people are actually doing and what their premiums actually are. A lot of what the pricing was based on years ago was the COVID years, the pandemic. During the COVID years, the pandemic, seniors avoided hospitals, surgeries, and preventative care. They did so because elderly people didn't want to go to a hospital.
Okay, he's starting to see, at least, even though he's calling a different name and, his thesis kind of revolving around that. That's good.
Hospital and potentially contract a dangerous disease that could kill them. So a lot of them just did not go to hospitals. This artificially lowered the amount of claims being done by the elderly population during the COVID years.
But you also got to look at what you can dig into the financial data. They were still paying a lot of stuff because there were costs, because there were doctors going to them. They were diagnosing. Remember from the other videos, they're diagnosing new things and they were going to the elderly. They didn't just not go in. People didn't just go in. They were still getting procedures done and things. But the thing is, the other thing was the vaccines. The cost for a lot of this was a lot. So it really balanced it out, to be honest. Like if you go look at it, the vaccine stuff, that was a mega cost because everyone was pretty much getting them and they were getting boosters and they were charging, because it was brand new, as much as they really wanted a lot of these companies, right? The full picture, they can maybe say it was this, but you got to also say, yeah, but there was also costs that they were still incurring. It wasn't like it was this perfect year for them. They had so much costs that they were having to pay. And there were also people that were dying that were on these. So then they're not paying anymore. The government's not paying for them. If they die.
And the insurers are making a lot of money in the process. These elderly,
it's like a few more minutes of this.
People were paying the premiums and they weren't utilizing health care. Now, at the same time, the insurers believed that this was partially permanent. The elderly people would start to come back and utilize different healthcare services, but they may do so gradually, slowly over time. And that was far from what happened. Instead, seniors returned in full force in 2023, 2024, and in 2025. Many came back even sicker after delaying care. They delayed surgeries and care and treatment, and they came with pent-up demand. So instead of them coming back gradually over time, or the drop in utilization being partially permanent, it was actually the opposite effect. They had pent-up demand. Now again, early on, these Medicare Advantage plans were very profitable because the premiums were priced to where they're having low utilization. Insurers assumed that they could keep the margin stable or even grow this over time. That confidence led to aggressive pricing. In 2023 and 2022, these companies were bidding for more and more customers, offering lower and lower premiums, trying to gain market share from each other. This created a race to the bottom. And now we get to current day where we have a flood of patients coming in, utilizing healthcare far above expectations, causing these companies to eat the cost in between. And we've seen signs of this. The problem has been reminiscent in multiple healthcare companies up until UnitedHealth Group. The first one to note this problem and create a red flag that the Medicare Advantage plans were grossly underpriced was Humana. They've acknowledged this mistake months ago, taking the financial hit and lowering their guidance. Then we have Elevance Health, which held up a bit better initially, but eventually also had to admit the same problem. And then we had the big one, UnitedHealth Group.
This is generated by AI, right? This isn't from them.
Waiting the longest. They didn't want to acknowledge that there was any issues. They tried to sweep this one under the rug, but it was inevitable.
That's not true. And the other thing you're not talking about, which makes me want to go down here, they had a mega data breach, cost them billions and billions of dollars, and they were really complacent because they were concentrating on that because that's a big deal. When you have a black swan, this is like a once in 50-year event that happened with this. So that, just like to not say that didn't happen it's a very lazy thesis. It's like, wait, what? They did. If you go look at the earnings, they did actually acknowledge that, but they didn't adjust the right prices, which they should have, because of the fact that, for one, like we were talking about, COVID, pent up demand, but also AI. AI is coming in, streamlining things a lot faster, people coming in, doctors pushing through people as fast as they can. You're seeing record amounts of, detections, people living longer as well. So now, yeah, you got a lot more costs, but you also had UnitedHealth Group. Their main issue was this data breach and this black swan event, because it was a big deal. And they were held hostage in a sense, had to pay things out. And, they really wanted to get this under control. And because they're complacent, they didn't raise the prices that they should have and should have adjusted for, like some other insurers did. And that's kind of where we're at right now.
UnitedHealth Group has a huge amount of exposure to these plans, with over 9.4 million people on Medicare Advantage plans. So they were the last to admit it. And in many cases, investors thought that they could handle it better, that they had a stronger network, they have a bigger mix shift of products and different things that they can use to make the hit not so bad. But it turns out it was still pretty bad for UnitedHealth Group. So they priced millions of Medicare Advantage plans for way under what they needed to be priced, and now they have to pay the difference, causing the CEO to abruptly leave, the company to pull guidance, and the earnings to be revised dramatically lower. In terms of where the stock stands right now, even as much of an issue as this is not going to destroy the company. In fact, UnitedHealth Group will recover from these problems. problems. And ultimately, as it stands right now, we have no evidence to believe that any of these companies are near bankruptcy or financial ruin. This is, after all, only one part of UnitedHealth Group's coverage. They have many patients on many different plans outside of these Medicare Advantage plans. It's very difficult for the market to accurately price companies when they've dropped 50% in only a matter of weeks. In many cases, investors overdo the sell-off. I believe that this sell-off is overdone. After all, even as dramatic as the events may seem, with the departure of the CEO and the company's earnings going down, this isn't a dire situation for the company. They will withstand this, and the company will continue to grow earnings in the long-term future. This dip in and of itself is temporary by nature. I view the stock as meaningfully undervalued today, and I think that investors that buy into it will likely do well over the next couple of years. It's not one that I'm personally attracted to qualitatively. I try to avoid insurance companies in general, but I don't blame any investor jumping into this one now.
Okay, so he is passive, so he's not taking any real stance. There was some thesis, like to his thesis moments, and kind of lazy. He was utilizing AI for that particular moment. That, you have people that get 300, 400, 500,000, maybe even 600,000 subscribers, and they can make mistakes. They might not see it the way, at least he kind of sees it the way, maybe Adam and I see it, and Everything Money as well. But one of the things that's been going on, we'll go in, and by the way, go at the end of this video, you'll see a link to my thesis. It's about 50 minutes, and I'll be updating it too. But I kind of hid it in there. I want you guys to grade me. What do I get? Do I get S, A, B, D tier? So what's going on right now? So UnitedHealth Group, I've been watching these puts, okay, 470 puts that expire next week. There's 300 and I think it's 86,000 contracts that have been exercised. These are bought and immediately exercised. Now, one of the things I say is that I think that this could signal a potential near bottom. Okay. I've seen this before in AMD and Tesla where these crazy amounts of puts are being exercised. And is it because a mega fund is secretly loading up this way? Because there is a way they can do this via puts. Okay. It's not being able to be done with anyone that doesn't have a prime broker, one of the top prime brokers. And you got to have a lot of money, a lot of liquidity. So pretty much no one does this, but it is a possibility out there. So they're trading near 2020 lows. Is a fund doing this because of that? Like I said, I've seen some other stocks do it. There's no official word. What are they doing with this? But it's literally like 8% of the entire market cap, current market cap, is traded just in these. Now I've seen other 0-day puts that were like $20 million worth, literally exercising them. So they initially go short the stock at that point. So it does kind of push it down. But the way it works with the prime brokers, they have to find these shares for them because they don't, most of the time, these companies probably don't own these shares because they're buying these new puts. So they don't own the shares. So it's not costing them too much. So versus the slippage of them going into the market and everyone seeing there's massive whales buying, they'll sometimes do it this way. That's one of the things that could be happening, right? The other thing I see is who could be buying, who we're going to see the next week. We've had some big investors buying, some super funds here, and there's been some really big ones. Christopher Davis, 2,000+%, a massive 353 billion position. We've seen some other big funds adding, nothing too crazy, but I think maybe Michael J. Burry might be one of the ones to add to this. He did have 4 healthcare stocks before. Remember, this lagging indicators. These aren't his new filings, as you can see here. But he had 4 healthcare stocks. So the stock was beaten down, deep value investor. Is he going to buy into this? At this point, UnitedHealth Group had not bottomed, had not really dropped as much just yet when he was probably selling all these stocks. And then he bought a bunch of puts. Now, these puts, he had positions in some of these, right? I think there's a possibility if he timed this right and he got that crazy dip in during the tariff dip, I guess we'll call it. Maybe Michael J. Burry is actually buying. So that is something I want to look into the next few days to see if he is. And yeah, definitely follow us here. We're gonna cover that. So the great thing that I showed on my last video, it's still around 89% institutionally owned, meaning 11% of the shares. So out of the entire market, diluted shares, 129 million, we're talking 89% of that is already locked up by institutions. Even after the data hasn't changed much, even after this. So a lot of retail scared probably is the one selling. So are we going to see a big, type move up when retail comes back in and more institutions continue to buy. That's what I love to see. I love to see when institutions that were holding for decades are still buying and coming in. And we've been seeing that. There's been a couple of these really big moves that's been, that are coming in. That's really good. They're reducing Meta, like they're reducing some of these bigger gains. Even Berkshire Hathaway, they reduced a big portion. That's pretty big. 31.64%. And where are they going? They're adding UnitedHealth Group. I like to see that. I like to see value investors doing that. I think there's a possibility we see Michael J. Burry coming in. So the other thing, the DOJ, now this isn't the criminal investigation, but the DOJ has settled this antitrust litigation. So they're basically going to do a few things. They're going to divest 164 home health and hospice sites to basically give way to what the DOJ's had concern for this particular M&A. So this is not going to bring billions and billions more revenue. We could see a few, but the good thing is the DOJ, this signals to me that they're pushing things a little faster than people might think. Now, this isn't the criminal side. It's a totally different part of the branch, but it does tell me that, hey, this new administration, I've been watching stocks that I've been in, the Federal Trade Commission, the DOJ have been really kind of blowing through a lot of this as fast as they can. That's good for a stock like UnitedHealth Group because it's a really fast drop, right? We do not want this to go another year over here into next year. We do not want this to draw out like it had with Meta and continue to drop another 20%. We don't want obviously that's more than that. We don't want this dropping down back to the 170s, 180s. I think that probably would be bottom at the most, but we don't want that happening. We want this to be a quick recovery. We want it to be a Meta type recovery in November 2022. And how can they do that? Well, they're going to raise costs. The DOJ, we want that to be done. And even if they have to pay a fine, we want management CFO to literally cut as many people as they can that, especially bad apples. Let's look at people. Were their customer service, complaints? Look at anybody you can cut, add AI in there, just like Mark Zuckerberg. Microsoft's doing this. The stocks, when they do this, they go up because they're cutting costs. Yes, that's what you got to do here, especially when you have 440,000 people. There's a lot of bad people probably work there. They're not giving people, the company, a good name. If you get rid of some of the bad apples, then I think that's going to be a good thing. And then the big golden swan that we've talked about that not anyone's really seeing is right now, the main thing with the Trump administration, they're not attacking companies like UnitedHealth Group. In fact, they're attacking the pharmaceutical companies. But what they're doing is they're wanting fair prices, and they want these prices to come down so the government is not going to pay as much for these healthcare plans. And guess what? When that happens, the MCR price goes down. It's 10 to 13% of what their costs are. You can get that down potentially to 70, 75 if you raise rates, and then the cost of this medicine goes from 800% more to down 90, 95%. And getting word, I've been hearing that, and what I've seen is potentially some of the biggest companies already are in Washington, and they've been making deals with Trump as fast as they can because they don't want the big tariffs that are coming. Next week, tariffs are coming. And next year, there'll be 150 to 250% tariffs. We'll look and see. I think these companies are going to be smart and make a deal. Also, let me know below what you give my score. If you go and watch the video, I want you to come back. Give the score on that video below, but also come back here so people can kind of see what score I got. And do you agree with these scores? Give their scores too down below.